Welcome to today's What Will Move the Market show. I'm your host Prem. It's Thursday, September 18th, 2025, and here is everything you need to know as the markets open today. US markets delivered a mixed performance overnight following the Federal Reserve's widely anticipated quarter-point rate cut. The Dow Jones Industrial Average gained 260 points or 0.57% to close at 46,018. While the S&P 500 slipped 0.1% to 6,600 despite earlier gains. The tech-heavy Nasdaq fell 0.33%, pulling back from recent record highs. The Fed cut rates by 25 basis points as expected, bringing the benchmark rate to 4.25%, the first reduction this year. Chair Jerome Powell characterized this as a risk management cut amid a weakening labor market. The central bank signaled 2 more cuts could come this year, though newly appointed Governor Stephen Mirren dissented, preferring a larger 50 basis point reduction. Key movers included Tesla gaining over 1%, JP Morgan rising 0.83%, while Oracle declined 1.71%. The VIX fear gauge ticked higher, reflecting some caution despite the dovish Fed pivot. Indian ADR showed mixed performance overnight with cautious trading ahead of the Fed decision. Infosys ADR gained around 0.8%, while Wipro advanced around 0.7%. ICICI Bank ADR rose 0.7%, and HDFC Bank gained 0.23%. The overall resilience in Indian ADR suggests continued investor confidence in India's growth story, despite ongoing foreign institutional investor outflows from domestic markets. Asian markets traded mixed this morning as investors digested the Fed's rate cut decision. Japan's Nikkei gained around 1% in early trade, while Hong Kong's Hang Seng showed strength, rising over 1% amid hopes of improved US-China trade relations ahead of Friday's Trump-Xi call. The Gift Nifty is trading at 25,505, up 82 points, or 0.32% from yesterday's Nifty close, indicating a positive start for Indian markets. This suggests the benchmark could open around the 25,400 level, building on yesterday's momentum where Nifty closed at 25,330. China's Shanghai Composite showed modest gains of 0.45%, while broader Asian sentiment remained cautiously optimistic on expectations that Fed easing could benefit emerging market flows. The Federal Reserve's dovish pivot marks a significant shift in global monetary policy, with Gulf central banks already following suit by cutting their key rates overnight. This coordinated easing cycle could boost capital flows to emerging markets like India. US-China trade tensions showed signs of easing with reports of a framework deal on TikTok and expectations of productive discussions between President Trump and President Xi on Friday. This development has supported Asian market sentiment and could benefit global trade-sensitive sectors. Geopolitical risks remain elevated with ongoing conflicts affecting energy infrastructure, though immediate market impact has been limited as traders focus on central bank policies and economic data. Domestic sentiment remains buoyant. The market regulator eased IPO norms for large companies and introduced a single-window system for foreign portfolio investors, which could boost capital market activity. Progress in India-US trade negotiations continues to support market optimism, with officials from both sides describing recent talks as constructive and forward-looking. This development has been a key driver behind the recent rally in Indian equities. Foreign institutional investors remain net sellers, but strong domestic institutional investor buying continues to provide market support. The India VIX remains at low levels around 10.25, indicating stable market conditions. For today's session, Nifty 50 finds immediate support at 25,150 and stronger support at 25,000. On the upside, resistance is placed at 25,400 to 25,450, with the next target at 25,500 to 25,600 if momentum continues. Bank Nifty shows strong technical setup with support at 54,650 and resistance at 56,000. A decisive break above 56,000 could open doors for 56,500. The banking index has shown relative outperformance, marking 11 consecutive sessions of gains. Both indices maintain their higher highs, higher lows formation with RSI levels supporting continued bullish momentum, though traders should watch for any profit booking near resistance zones. Crude oil prices declined overnight with Brent falling to $67.58 per barrel, down 0.54%, while WTI crude dropped to $63.81. The decline comes despite supply concerns from geopolitical tensions as traders weigh economic growth prospects. Gold prices remained elevated near record highs with domestic futures at 1,10,530 rupees per 10 grams, though showing some consolidation after recent sharp gains. Silver prices also stayed firm at 1,27,370 rupees per kilogram, reflecting continued precious metals demand amid global uncertainty. With Gift Nifty indicating a positive start and technical momentum supporting further upside, traders can consider a buy-on-dip strategy. Focus on banking and IT stocks which have shown relative strength. However, remain cautious near resistance levels and watch for any sudden volatility if global cues change. Keep an eye on stock-specific developments and sector rotation as the market digests the Fed's policy shift. The low VIX environment suggests stable conditions, but position sizes should account for potential overnight developments in global markets. That's your morning market wrap-up. Stay tuned for the evening wrap and send in your questions. Trade safe and stay profitable.